Hello, this is Bill McAfee. I'm the president of Empire Title Company, and we're going to give you the update for November's MLS. Before we do that, we got a lot of good feedback from the November chicken incident that we filmed last month, so we're going to give you something special. The marketing department is helping out, and we're going to sing the 6 Days of Christmas real estate style. All right, here we go. On the first day of Christmas, my true love gave to me lower listing inventories. On the second day of Christmas, my true love gave to me 2 short sales and lower listing inventories. On the third day of Christmas, my true love gave to me
3 rate locks,
2 short sales and lower listings inventories. On the 4th day of Christmas, my true love gave to me 4 less foreclosures,
3 rate locks,
2 short sales and lower listing inventories. On the 5th day of Christmas, my true love gave to me
5 new listings,
4 less foreclosures,
3 rate locks,
2 short sales and lower listing inventories. On the 6th day of Christmas, my true love gave to me
6 clients are calling, 5 new listings,
4 less foreclosures,
3 rate locks,
2 short sales and lower listing inventories. I want to thank the sales department. Believe me, I had to blackmail them and withhold pay and everything to get them to do that. So truly appreciate that, guys. Okay, here we go. We're rolling into the November stats through the Pikes Peak multiple listing system, and I want to just talk about on average sales price. Average sales price were about $218,230. If you go on to the next slide, which is this one right here, this is the average sales price on a running average. And if we look here, we're at about $220,000. Notice that we've been going down. At the beginning of last year, I said, and not by surprise, the prices are trending down, number one, because the banks are dumping the properties. Number two, the higher end markets are sliding down. So no big shock there. Moving on here, the median sales price. The median sales price was about $185,000 for the month of November. And on a running average, it's about $187,000 and change. Now notice here again, the median is trailing back down, and again, I attribute that to bank inventories. The banks are just dumping the properties, and the high-end market is sliding down. Moving on to the next slide, the number of sales on a previous 12 months running average. If you look here, we're pushing about 701 units through on a 12-month running average. Now, in the high times here of 0405, sometimes we were pushing as many as 1,400 units through the MLS. But remember, that was an unbelievable time. That was the best ever. So we're coming back down into historic checks here. Moving here on actives on a 12-month listing, we're about 4,376 active on the market on a running average. Now, the great news about this is more of a historic level. If you go on a 10-year average, and notice that we're getting right back down to that. So that's good news. Now, I want to say something on the listing inventories. Part of what's going on is people who couldn't sell, especially in the upper end, were pulling their homes off the market. So that's something. But then another thing that's happened, our rental market here is just absolutely phenomenal. It's the best that I can recall. I mean, if it's vacant, the only reason it's vacant because you're putting carpet and paint in it. So as an investor or a real estate, if you ever thought about getting in the rental market, it's absolutely exploding right now. Well, think about this, when all the troops come home from Iraq and Afghanistan. So just, again, some more positive effects into the rental market, which is already on fire. Looking at the next slide, we got sales as a percentage of active listings. Notice over here, like right here, and this is on a historic trend, on a 10 to 15 year average, on a 10 to 15 year running average, it'd be about 15%. We're up over 16. In fact, we're at, what, 16.03%. So that means we're selling about at least 60. If we have 100 units available, we're selling 16 of them, and 15 would be on a 10-year running average. So that is very good news. Looking here on the number of months of inventory, this is fantastic news. We're at 5.23 months of inventory, 6 months being neutral. Neutral means it's not really a buyer's market, not really a seller's market. If you get way below 6, it becomes an incredible seller's market. If you go way above 6, it becomes a big-time buyer's market. Looking at interest rates, they're phenomenal, 3.99%. And you know what? The government may tamper with this some more, hard to tell, but the bottom line is because of what's going on in international events, Greece, Spain, there's just probably not a ton of upward pressure on them in the near future being in 3 to 6 months. Looking here, we still have 26% of those are selling above $250,000. Now, what's amazing about that figure is from the beginning of the year till now, that's switched about 2%. So we got, again, about 26% are selling above, about 74% are selling below, about a 2-point switch. Now, what's causing that? The $300,000 to $500,000 homes, even though they're not increasing in value because prices are still down, there's more and more units selling. So again, we're seeing some stuff. I want to give a year-end, or not a year-end, but January through November of this year compared to January through November of last year. Both average and median price are down 4.1 and 4.3% respectively. No surprise there. Again, bank-owned properties dumping and higher homes are sliding down. We have residential sales units. This is a big shock. Last year we had the $8,000 home buyer credit. We don't have that this year, but interest rates are so good, and it could be a function of our market getting better too. Look at this. We're up 3.5% in the number of units sold. Now that is positive. That's truly amazing. If you were to ask that, well, you wouldn't see anything like this on the national press. That's going on in our local market. Good news there. Inventory levels are down dramatically. We're down about 8%. Again, part of that's because the listing inventories are going down. The other part is because the number of units sold is going up via the 3.5% increase. Number of listings is down. We already talked about why. Foreclosures, great news here. Foreclosures are down 25%. In other words, the number of people going into foreclosure is 25% compared to where it was a year ago, January through November. So we're seeing some very positive things here. Election year is always a little spooky. Something I want to say, these interest rates are phenomenal. Buyers, please lose these interest rates. Hard to tell what they're going to do, so make sure that you're locking in on those. Investors, if you've ever thought about being a landlord, now is a perfect time. The market's already incredibly hot. And think about this, all the troops coming back home. I think I would like to tell you, consult your professional real estate agent. There's a lot of opportunity in this market, and it's out there if you want to be taking advantage of it. Thank you. This is Bill McAfee with Empire Title.